Hi, everybody. Welcome to episode 11 of the Bulls and Kangaroos. Good morning, Stephen. How are you?
I'm all right, Peter. Good morning, good evening for you. Yes. How are you, mate?
Yeah, exactly. Yeah, we're starting to sound like was it the two Ronnies, was it? Or was it yeah, I think it was the two Ronnies, wasn't
It
it?
was. Yeah,
Yeah,
yeah.
exactly. Yeah, no, all good here. It was lucky enough, although it was a bank, although I'm living in Spain, it was the company I work for are actually an English company, so our boss allowed us to take the bank holiday for the UK. So we've had a nice long weekend and then back to work today. And for
Okay.
you?
Um, yeah, it's been all right, mate. I had that race at the weekend, and I've just been taking it easy, recovering, letting my legs recover a little bit after that. So that was,
Yeah. And
you
how
know,
did the race go for you?
it was tough, mate. It was tough run this time. It took me eight
Yeah,
and a half hours this time round, so I was slower than I've done this particular race in previous
yeah.
years. There's a lot of climbing, seven and a
Mm,
half thousand feet of ascent on it. So it was a nice day
that's
out, but it was tough.
yeah. No, brilliant. Well done again. Well done again. I know
Yeah.
it's something you enjoy doing. So anyway, back to all things trading. So for me this week, the video I'm going to be talking about is I've actually now finished the back testing on the pair for the pound yen. So in the video this week, just talk about a little bit about a couple of things I've noticed, and now we're into the optimizing process. So let's take a look at my video and come back, and I'm sure you've got a couple of questions for me, Stephen. Hi, everybody. So this is my video for the week. You may recall that I'd mentioned that I'd noticed something in the back testing that with the this particular pair, if I actually just got a wick that touched the 34 EMA, and then I had the two candles, which obviously is a legitimate setup from the rules, is that we were finding, or well, I was finding that these trades were failing. So what I did is part of my optimization process is I've actually removed these trades when I've seen them, and I came across a total of 8 of them, and 6 of them failed. So it is obviously a good thing to do. So I'll show you the results of that optimizing process, but you can clearly see this example here. So there we are. There's our touch. We've had the nice strong pullback. We've had the touch off the line here, and then we've had 2 candles in bullish direction. So this would have been our candle for entry. Now, based on where our stop losses are, this is where our targets would have been up here. And you can very clearly see we've had 2 bullish days and a third day here. Well, it's still bullish, but it's a bit of an unusual bullish candle. Normally, you'd expect to see wicks either side of here, similar to this candle here, which we would call a doji candle, or depending on where the wicks were relationally, we might also call it a pin bar. And you can just see it's got a bit of a reversal pattern here, bullish candle. Then we've got this small candle here, and then it's just reversed back the other way, and it's just fallen away. So as I say, I saw this on 8 occasions, and 6 times it's failed. So what we're going to do is I'm going to just show you now. I'm going to move across to show you the results, and then we're going to go back to Stephen, and I really would like to ask his opinions on any other ways we potentially could look to optimize this strategy to get the very most out of it. Okay, let's look at those results. Okay, so we've got the 34 EMA strategy backtesting summary here for the pound yen. So we backtested, the results are over a period of 13 years and 8 months. We had 19 winning trades. We were stopped out, in other words, lost 0 trades, and you'll see there's a little asterisk by that, and we'll come on to that shortly. We increased the account size by 19%, because every single trade we entered, we were risking 1% risk for 1% reward. The shortest time period for any trade was just one single day, and the longest time of any trade was 38 days. And 38 days is a long period because we need to add in, so that's going to be about another 7 to 8 weeks. So you can easily talk about 40. Yeah, we're getting on close to almost, getting on closer towards 2 months for actually in that trade, which is a long time. Average days per trade was 10.63 days. In other words, we just rounded up and call that 11 days. Now, we said here about the little asterisk. So the losing trades were removed during the initial optimizing of the strategy. A touch of the 34 May of, sorry, I repeat that. A touch of the 34 EMA with a wick, slight typo in there. Let me just type that in there. With a wick, failed on 6 out of 8 attempts. So basically what we'd have to do is we would have to, effectively we're knocking, if we added another trade, 8 trades, we're knocking another 6% off of that. So it really does make a huge difference just by the optimization. So just by that initial optimization, we've increased this performance of this strategy by 6%. And that's quite a lot when you look at that it's only, the 19%, an extra 6% is a lot. It's almost like 1/3. So the next steps that I'm going to discuss with Stephen is how we can further optimize that. So in other words, what we're looking to do is how can we potentially, I put down a couple of ideas here, staying in the trade and catching the run when it's trending. Another option is, how could we maybe stay in the trade to take a 1.5 or 2% or even more? And basically the first thing is any other ideas. So let's go back to Stephen and see if Stephen's got any other ideas he'd like to share. Okay, Stephen, any questions for me?
All right, so I had a look at that, and you talked about optimizing, and you took 6 losing trades out, and I think it was associated with the candle that touched the 34 EMA line. So you've tweaked your entry rules, is that right? Just around that
Yeah,
that
what the original rules of the trade, and again, I suppose this comes back to the importance of actually when you take a strategy of actually backtesting, don't just believe what somebody would have told you. So part of the strategy was that it says when that a candle came back, it didn't matter whether it was a wick or a body touched that 34 EMA, and then the 2 candles going in the direction you're trading. So in this case, I think the example I showed was 2 bullish candles.
yeah.
Um, I found that every time it worked with a wick, 6 out of 8 times, which is what 75% of the time, it was failing. So I thought to myself, well, a logical thing would be is to remove those 6 losing trades and sacrifice the 2 winning trades, because at the end of the day, the actual net account gain by just working on the bodies, by the body touch rather than the wick touch, it made the strategy more profitable over the period.
Okay, so now you're looking for the body of the candle to touch the 34 EMA, not just the
Yeah,
wick.
yeah. So I
Yeah,
need to
yeah,
have a body touch on that. So I've
yeah.
amended the rules accordingly.
Okay, mate.
And yeah.
All right. There was one in there on the second part where you talked about being in a trade for 38 days. Now,
Mm.
um, what if you're in the trade for 38 days? Was there other opportunities within that period that you couldn't take,
Yeah.
or how
No.
would you deal with that?
Okay, then. So that's a good point. No, when I actually did the back testing and went through that period, there was no other setups that appeared.
Okay.
Because I did wonder if there was going to be any more setups, but there was no other setups in that period.
Okay, all right. So you didn't have to think about that too much in this
No,
instance.
no, 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 no. But I did go through the process of following it.
Okay. Um, we looked at 19%. Yeah, 19% over 13 years, and you do a quick, like, back of the envelope calculation. That's a bit more
Mm.
than 1%, really, isn't it? I
Yeah,
suppose.
yeah, yeah.
A year, and on the face of it, you think, oh, that's not a great return. But then I suppose the whole exercise of putting a portfolio together is not finished yet. So
No,
what are your thoughts
no.
around that?
No, as you say, it's not on, from, just if you just took a look at that particular pair, it doesn't seem very great. But the test is going to be is what's it going to be like with all the other pairs?
Okay.
How's it gonna fit together? Because you might get now, I mean, I'm not quite sure which pair I'm going to move on to next. I'm just going to go through. I'm probably going to maybe move into some Euro pairs. Maybe like I'm thinking maybe starting with the Euro Oz and go Euro CAD and just go through the Euro pairs. Who knows? We might come across a Euro pair that suddenly delivers 38 or 40% over that period of time. So all of a
Yeah.
sudden, I think if we can be I mean, if we're increasing our equity on our account by somewhere between 2 and 3% per month, I mean, it's great, really, isn't it? If you think about it,
Yeah. Yeah.
all of this work we're going to do up now, and then later on, every month, your account's going up by 2 or 3%. I mean, you're never going to get that return in a bank.
No, and I suppose once you've done all of the pairs that you want to test, once you've tested all of the pairs that you want to test, you can then start looking at how you want to combine some of those pairs into a portfolio and try and find the best combination of those pairs
Yes,
that you've tested. And
yes,
sometimes a pair with a lower return, I've found anyway, can help smooth that equity curve. If other pairs have been
yeah,
generally good, but maybe have had, say, a bad year, sometimes
yes,
sometimes
yeah,
this like pairs like can come in and support the other pairs almost. So
yeah, yeah.
you don't really discount anything at this stage, do you? You just
No, 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 no.
you keep it for when you finish the whole back testing exercise, and then you
Yeah,
play around with building the
yeah.
portfolio, I suppose, don't you?
Yeah, it's like any financial portfolio. It's like when I don't know, for instance, like when maybe not the best example, but I just think of, a conversation I had a couple months ago with my financial advisor around pension. He was saying about, I've got my pension, some of it's in this, some of it's in
Mm,
that. And the idea is that, you're offsetting a little bit of risk by a steady, well performer that, makes sure that you don't lose that your
yeah.
that equity curve is still growing in your pension fund or whatever fund it might be. So yeah, it's a really, really important point.
Yeah. No, no, good, mate. I think, yeah, I think that was it. That, yeah.
Yeah.
So, yeah,
Okay.
move on to the next one, I suppose, won't you?
Yeah, exactly that. So next thing we'll be starting as I say, the Euro pairs. Now I've got a couple of weeks when I'm actually away, so I'm going to be a little bit slow with the next lot of pairs because I've got a trip to the States coming up, and I've got a
That's
couple of other
right.
business trips coming up. So I'm going to be a little bit slow on the process. But I suppose once it's all done, this is the great thing about the trading because once you've got the whole thing perfected, you don't need so much time. You only need those 5 or 10 minutes per day just to go in and just check your charts. So that's the beauty of and the reason why I picked that particular time frame, the daily time frame, because I know ultimately I'm only going to have that very short window at the end of each day to check my charts. So anyway,
And
so let's
yep.
let's move on to your own week. So tell us a little bit about your own week, Stephen, before we go in and have a look at the at your video.
So it's been relatively uneventful, trading wise,
Yeah,
and I've just been watching, which you're going to see when you have a look at the
yeah,
video. Yeah.
great. Let's take a look at Stephen's video.
Okay. So what I've been looking at this week, the three pairs that I trade this strategy, this structure-based strategy that I've got. That's the pound dollar, the Aussie CAD, and the dollar yen. As few of you may have seen lately, um, the yen pairs have been on a bit of a tear up, um, and that was to do with some Bank of Japan news that was out, and I didn't pay too much attention about the details of the news itself, but suffice to say, we saw these massive 500 odd pip swings. Um, the Aussie CAD on the daily. That's my higher time frame, so I trade that on the 4 hour time frame. The Aussie CAD has just been in a bit of sideways movement for ages, really. Where are we? June last year. Yeah, just like a bit of a sideways range, but more recently has started approaching this level that I've got marked. So I'm starting to look out for. So where are we? About nine. Yeah, 9050. About 9050. So we're back up in that range, and I'm keeping my eye on that just to see if we see any, if we see that remain as resistance, um, or if we see a break above this level. And what I'd be looking for specifically on this is a break above. This is a live candle now, so I'll leave that one alone. But this candle, so a break above there, really. Sorry, and a close above there. It's important that you get the close above, for me anyway. And if I do, well, then that might put me in a long bias. That will put me in a long bias. But again, when you look across at what the Aussie CAD's been doing, the next target level is, what's that? 9097. So about 9100, which is, look, let's look at it this way, right? If we get a break above that level that I noted, let's just jump down onto the 240 minute time frame. Yeah, okay. So what I might be able to start doing then is building up a case for entry. So when that pops in, we'll have a little look at that. Right. So this is what those couple of wicks look like on the daily. This is what they look like on the 240. Okay, so I need the break above and the close above on the daily time frame to put me in that long bias, right? If I get that, I can start looking at, well, we're almost in a bit of a pullback trade, a bit of a pullback here. There's been a bullish candle to the upside. This little channel just looks like a bit of a loss of momentum. We saw that, and then it dropped off again. I'm looking at it, but really, this analysis here almost doesn't count because we haven't had what we need to be able to drop down and go into that deeper level, or those deeper layers of analysis. Not for me anyway, because I need that break above that level and that close above that level. So I'm still in watching mode. I'm still in patiently watching mode. The RSI is approaching that upper limit that I've got set at 80 for overbought. Yeah, it's been one of those weeks of just watching, really. So this is what I see on the daily pound dollar. I'm seeing this as a downtrend on the daily, because I was watching this level at around 125.35, and when price broke below on this candle, that put me into a bearish rotation situation. And now I've seen price come back and it's pulled back up, and so it's still in that bearish rotation for me. So I can see, I can see that bearish movement, bearish bias. That's the word I was looking for. If we drop down onto 240 minute, let's see what we can see when we get down to that the trading time frame. slow on the old interweb. That'll pop up in a minute. But yeah, it's been slow, and sometimes you just gotta. Well, you can see that I'm starting to look for I'm starting to look for trades on this pair, so I've got to be careful what I'm doing with my mindset as well. So yeah, so these blue lines are those ebbs and flows that I just marked up on the daily chart, and I just have them there so I can see the context of the bigger move on that daily pattern. And then yeah, so price is sort of in this pullback, it's just gone flat and gone horizontal, and just started ranging, and I can pick out that 125.35 line again. I can see that that has been some structure support there, and then there's been a bit of resistance here, and then it's come back up. There's been a bit of resistance again, a bit of support. So that's why I'm thinking, if I see evidence of this level possibly being support again, and I don't know if you noticed, I had just a little couple of candles just drawn on. Like if I see something like that, with maybe a test to the downside, low wick test. Just draw that in. It snaps to grid, so it's a bit difficult sometimes to draw these little things, but there you go. But then if I get, oops, something like this, I suppose, I'll get there, don't worry, I'll get there. Right, so draw that in there. That's a entry pattern for me, or a, yeah. So I see price come down. If this candle ends up pushing down and then pushing back up, I mean, ideally, I'd want it pushing up like that to be like a really like deep test pin bar, yeah, with the top part of the pin bar in the upper third of the overall candle. That would be more convincing for me. And then if I got a higher close on this one, then maybe I can look then for entries for a long trade, and I would look at this level, the close of that candle there. There's a zone, I suppose. There's a zone there that you could look at. What else could we look for there? We could, I would then think about putting stops down below this, but again, stops ideally want to be, I would say, you know, it's all relative, isn't it? Relatively safe, maybe beyond there. But then you've got to look at what your risk reward is, haven't you? So, that's one possibility that I'm looking at. I'm keeping my eye on that, but it'll have to be pretty convincing as a support. I'd have to see that as a decent support level before I considered entering that. So yeah, dollar yen, Aussie card, pound dollar, they're not giving me much at the moment, and it's been one of those weeks. So I suppose the watchword for this week has been wait.
Hey, Stephen. So it's a very different week to last week, where last week you were talking about three losing trades, and this week, and that's trading really, isn't it? I suppose it's like when you go fishing, as long as you can catch three fish and or whatever else, and then the next week you think, right, I'm going to go fishing at the same time, and you
Yeah,
catch nothing, and that's
yeah,
kind of what happened to you this week.
exactly. And other people, other traders may look at what I'm reviewing. They may see opportunities in there, but I'm saying what I see and how
Yeah,
my rules are. You know what I mean? So, um,
yeah.
yeah, for me it was a waiting. and particularly on that Aussie CAD pair, I was waiting for
mm,
price to get back up to this previous resistance level, which it's doing now. So I'm on the lookout for something there. On
mm,
that pound dollar pair, I was trying to find some intermediate levels within a range, and started thinking about, I'm almost forcing a trade,
mm,
and that probably comes across in what I was sort of describing there as well. So it really is a case of circling back and, zooming out a little bit and just saying, let's get
mm-hmm,
back onto the higher time frame, um, and have a little review of the landscape, try and form the bias, take that bias into the next, it down
mm-hmm,
into the trading time frame, so you know which direction you want to get involved in, and
mm,
and really sort of stick to your guns. And when I find myself in these, you almost think you've forgotten how to trade. You almost think that there's
yeah,
nothing happening, or you think there should be something happening, and
mm,
you're thinking, I don't know what to do anymore, or I've forgotten, or and you feel like you have to try and find the trades to validate the fact that
mm,
you know what you're doing.
yeah, yeah.
But at
Because
times like that, sorry, Peter, yeah, at times like that, I've just got like a bullet point list on the, like a little, like your post-it notes, yeah, your little sticky
yes,
notes.
yes,
They
yeah,
have
yeah,
that
yeah,
on the computer, and I can just pull that back up on the screen, and it's a little run sheet, and I just go, all right, stop, here we go through the steps.
yeah. Yeah, and I suppose I mean, we were talking a little bit about before we came on to recording the show tonight. This is really where it's so important to have your trading plan, not just, on your PC, but have it printed. Well,
Yeah,
maybe not for some people now, but more so for us. I mean, because I've, been a little bit older than some traders, not saying we're over the hill by any stretches, but, a lot of us still like to have that touch and feel of paper.
yeah,
And
oh
so
yeah,
quite often just having that, as you said, like, a post-it note or your trading plan printed, because it's, as we were saying there, you've got to make sure that whenever you get into these particular points, is that your flow of the process you follow leads you back to your trading plan to say,
yeah.
right, this is what I've got to do. Right, okay. I mean,
I think
what would be, sorry, yeah, go on.
I was just going to say, if you don't check in regularly with your trading plan, I find that you start remembering what your trading plan is, and then you can start like drifting, without noticing. So you're starting to deviate away from your trading plan because you're almost remembering the rules, and they get a little bit fuzzier over time, and you might
Yeah,
be a little bit flexible
yeah,
and lenient with yourself. So it's good to just say, stop, here it is, one, bang. If I see this, then I do that, two, bang.
yeah,
And
yeah.
it just puts everything back into sharp focus.
Yeah, and I think I know it's kind of taking it to another level, but I just think back in my own times with sales, we used to be sent on a refresher courses.
Yeah,
I got a mate who's an airline pilot. He goes to the States every 6 months for this rigorous tests,
yeah,
that he has to go through. And I think it's really important that it's very easy for us to forget the odd point, cut
yeah,
out something and forget everything.
exactly.
It really is.
Yeah,
So I mean,
yeah.
what other sort of self-talk would you do that would maybe help some of the viewers?
I am. I don't
Any
know if
sort
other
of
people,
techniques that you would
yeah, I
use
don't,
or any little
well,
tips?
I don't know if other people do this, but I speak like, I don't, when I'm looking at the charts,
Yeah,
I actually talk out loud and talk myself through the process, and um it's kind of like a little bit of a conversation sometimes. So I'll be,
mm,
okay,
mm,
I'll be looking on the daily time frame, and I'll be saying, okay, price is approaching this level. This is 152, and I'm writing the notes down, approaching 152, and then I'm starting
mm,
to use
mm.
the phrases and the expressions that I hear our mentors use all the time.
Yeah,
Um,
yeah,
look left, structure leaves clues. Is there any previous structure that I can see I'm coming to? Is there an even handled number,
yeah,
or or a price that looks psychologically significant? Y-
yeah,
And and I talk through those steps because
Yeah.
um, hearing it out loud, I think just keeps you on track a little bit. And then when I started looking for this, say, for example, again, this pound dollar intermediate, somewhere in between the ranging zones,
Mm.
I'll say to myself, hold on a minute, Fitzy, just take a little look at this, have a little zoom
Yeah.
back out, and it's almost like it's somebody else talking to me. Um,
Yeah.
and that's easy to do in your own room, isn't it? It's different if
Yeah.
you're in a different place with other people, I suppose. But that's one of the things
Yeah.
that I
Yeah.
do. And I do it when I'm running as well. If I'm feeling low or something's a bit tough and I find myself in a little bit of a negative um
Mm.
moment, it's just like, whoa, ask yourself the question, just check in with yourself. You're all right? How's your
Yeah.
ankles? How are your knees? How are your hips?
Yeah.
So
Yeah. Yeah.
I'm saying to myself when I'm in that situation, have I got a bias from the higher time frame analysis? Have I got some significant levels that I'm thinking about? Is there
Yeah.
any pauses or little range bound areas that I should be concerned of? Am I trying
Mm.
to set targets too optimistically? Is my stop, and I'm asking these questions
Mm. Mm.
sometimes out loud, as I say, just to help check in.
Mm. No, but again, it comes back to the importance of a really solid trading plan, and the fact is that you you've almost got a process that makes sure you make sure that you read that rather than just, well, I'll check trading plan. You've actually almost got a process that leads you into making sure that you read it,
And it's not
and
easy, mate. You know what I mean?
of course it
It's like,
isn't.
and being consistent is the hardest thing. But all of what we're talking about and what I'm trying to explain or give insights is really just to show how I'm trying to be consistent.
Mm. Mm.
I'm not perfect and it's not perfect, but you've got to try and get your approach and everything you do to be consistent because then, like I've said before, it's measurable then, isn't it?
Yeah.
It's scientific, the approach, and
Yeah.
then you can really start understanding what your performance is like.
Yeah, yeah. No, I think that's really, really, really important. So, I mean, I don't think there was any other questions there really, because I mean, you've kind of talked through it. You've talked a bit about the self-talk. You've also talked about the process that you also follow, you know. Was there any other points that you wanted to sort of add or other little tips that you wanted to share before we close
Um,
off?
well, other than saying to anyone who's watching out there, as Peter's going to be away, Um, it'll be just me, so we'll see how that pans out. But I'll get something together and see how that goes.
Yeah,
Peter
you'll be
does all the
fine, mate.
editing. Peter does the editing, you see. So we'll have to see, eh?
No, everything will be fine, mate. I have total faith in you. It'll be good practice for you, you know. You'll come up with a process. I'll have to share my editing plan with you, you
Yeah,
know.
yeah. All right, mate.
So okay then. So that kind of really wraps up the show for this week. As I say, it's we're into the double figures now, episode 11, and let's keep rocking on. And as I say, I won't see you now for a couple of weeks, but Stephen will be here, holding the fort and doing a very good job of it. I can assure you. So, as we like to say, please like and subscribe and leave us comments, and please be part of those 10% of traders that 100% trade your trading plan. Until the next show, thanks very much. Bye bye. Bye,
Cheers. See you,
Stephen.
Peter. Bye,
Bye
everyone.
bye.